Well, so we're waiting for Israel to arrive, but I think in the meantime, you two can get going on introducing yourselves because he knows you. So I'm Richelle Martin of the Research Foundation, and I'll let Todd introduce. All right. Well, you insist. Age before, what is it?
Using elementary math, I round down to 40. She rounds up to 40.
Yeah,
we're the same.
We're your average investor. I'm Richelle Martin. I run the Winnow Fund, which is a kind of a micro VC fund. It's about $10 million in committed capital. I'm based in Madison, invest all over the state of Wisconsin. We only invest in Wisconsin-based companies. And part of that is because I'm affiliated with the Badger Fund of Funds program, which does have some state taxpayer dollars in there. So we make sure that those dollars stay within the borders. I graduated from UW Milwaukee. Yeah, it's awesome to get to come back here and think about how things have changed since I've been here, and then also to see everything that's changed on campus. This building did not exist. And so when I graduated from here, I moved up to Madison, went to law. And that's where I really got interested in entrepreneurship. I started working at what's called the Law and Entrepreneurship Clinic there, which provides free legal services to entrepreneurs in the community all across the state. Anyone that is thinking about starting a company, I definitely recommend them as an amazing resource because they will help guide you in the right direction right from the get-go. And so one of my interests after law school, I started working at UW Milwaukee. I worked in a tech transfer office, negotiated research contracts with for-profits that were looking to sponsor campus research. Went through a lot of issues with intellectual property, confidentiality, data sharing, publication, all that stuff that I'm sure a lot of people here are really familiar with. But what I really enjoyed about that job is seeing how much innovation was happening on campus. And I started getting more and more calls from people, students, faculty, staff saying, I have this really great idea, or I created something really cool. I want to turn into a company and I don't know what to do. My position at UW limited me in what I could do for those individuals. So the first opportunity I had to move off campus and to move more to the funding side than the lawyer side, because people like you better than, that's what I did with the Winnow Fund. And so I have a particular interest in sourcing investments from colleges all across the state of Wisconsin, but we don't solely invest in university spin-offs. But so very, very happy to be back on campus and to be talking to some people here with companies who think about this.
I always forget, so when Israel shows up too, that all three of us are non-practicing attorneys. I always forget that. You have a question already on her background.
My whole question is, you said something about you was trying to start a business.
The Law and Entrepreneurship Clinic. So it's a part of UW Law School, and it's student attorneys who are interested in working with startups, and they provide free legal services under the guidance of licensed and practicing attorneys. So if you're looking at choice of entity, if you have questions about regulatory concerns, even if it's just, types of investments that are available, investment documents, they can help you with a lot of that stuff. And it's uwle.org. That's their website.
We'll have them here later in the semester. Jeff Lindsay usually comes over.
Oh yeah, great.
I was going to say, in fairness, I don't think they do. Marquette does not have.
They do.
We do. Marquette Law School.
Yeah, we do.
Okay.
We work with both of them.
Yeah, there we go. There we go. So, shame on me.
We've got some context there for you.
Yeah.
Would they be able to help me the placing of money and where it's directed?
Like investment?
Basically, once the program is set up, how we manage out the payment being received and hand out.
So like internal accounting stuff?
Into the business?
I think it is accounting stuff.
Yeah, that's separate. So the clinic does the very kind of formational stages of legal work for a company. But would learn about basic accounting, but there's systems like QuickBooks, so there's things that will really help you get up to speed on that. My recommendation then is once you do get a little bit bigger, if you have a lot of things like inventory that you have to manage, then I would say probably best to work with a CPA.
Do you have anybody for that?
Not free, unfortunately. But I will say the fund works with Whipley, and we've had great, success working with them. I don't know if you guys have preferred service providers.
We do, there's some common ones, but again, they're not free. I would suggest starting with some of the support organizations around the metro area. It's all dependent on the type of business that you have. If it's more tech focused, or more of a mom and pop lifestyle business, there's different support groups that can help you make introductions or geared up to what your specific needs are.
And I would say Todd's probably the better person to ask about more of the local resources, because I'm more familiar with the ones that are based in the Madison area.
One of the small business development centers be good for him to talk to. I know that they have financial advice and so on. That's great.
Yeah, if you Google it, there's a lot of places that put on like one-on-one classes. And given the last couple of years, a lot of them are also available online. They've been pre-recorded. You might just want to take a look.
Yeah. Small business, biz starts, depending on the type of business, you can even get into, if this was a good thing for Wibic. Wibic has all this support infrastructure, where they have seminars and classes and choose your mentors as well. So it's just dependent on the type of business.
So I mean, because I'm bad at spelling, right? Like I mean, the law firm that's in, I would say, and then I also need information for what she said.
Why don't we chat after?
Yeah, there's a website, Start in Wisconsin, that has like all the providers involved with startups. So check out that website. See who's on that. We didn't even finish intros. You're fine. So Todd was just gonna.
Plant.
Yeah.
Getting us to wait until you got.
I appreciate it. Todd Sobotka, I'm the executive director of BrightStar Wisconsin. For those of you who are not familiar with BrightStar is a pretty cool weapon for the state. It's the first of its kind. Only Wisconsin has it. We are technically a 501c3 charitable organization that acts like a venture fund. So we still look at the same types of businesses and opportunities that Richelle or Izzy would look at, but money into us isn't invested for a return. It's donated for the good of Wisconsin with the recognition that really it's an early stage tech company. You get rapidly scalable opportunities that create jobs, transformative wealth, economic development that is lasting and in some ways transcendent for a region if you get that big company. So again, we look at the same things. This isn't grants, we invested, but the model is completely different. And so when we have returns, we do not pay back investors. That money stays in the foundation to invest in Wisconsin tech entrepreneurs over and over again. So money into us lasts forever. It's a legacy thing. It's just a money machine for the state. More about me. It's not worth wasting time. Not as exciting as her. I'm way better than him. So it's
I like
it's
them
true.
both.
With that, would you like to introduce yourself?
Israel Squires, I'm the managing partner of Midpoint Ventures. So we actually are a third different style of deploying capital. So you have a nonprofit fund, a syndicate, essentially an angel syndicate. So two aspects of our firm, we have a product building venture studio. Effectively, we identified that there's a massive gap in Wisconsin. There's a lot of talent, a lot of folks that are industry experts that are looking to start a tech company. They're not an engineer. So you have that, oh, who's going to build my tech? Who's going to, then you have to go out, maybe convince one of these two to write an initial check, then utilize that capital to then find your tech team. So on our product building studio, we have over 400 engineers. We have a product person on our team, an AI engineer with 22 years of experience. We look to find those founders and service the technical profile. Now, take equity in exchange for that transaction, but we effectively look to get that company or that founder in a better position to raise such capital. The other side of the firm, We'll also invest in those companies outside of our studio engagements, anywhere from 150K to 500K to invest. And we focus on artificial intelligence. So if you're a founder of an idea that's looking to disrupt an industry through artificial intelligence, machine learning, or data-driven technology, let's check.
Let's chat.
Actually, so you mentioned the amount of money you invest. Can you both discuss kind of the levels? So someone asked me that question, and then I remember, I don't know if you still have some sort of like proof of concept.
Yeah, we have two verticals that we use for our investment decisions. One's a little more like, I say traditional, but there is no such thing as traditional investing anymore. But it's what we call pre-seed. So we look at companies that are pre-revenue. Usually they have a product, but it's in the early stages. There may be some, free version of the product available, maybe a couple users. And then, what we really look at is the team. So we want a team that we know can take that, scale it, and can execute on the business plan that they've put together. And when we look at those types of investments, it's somewhere like $350,000 to $500,000. And I'll tell you, the target equity that we look for is somewhere between a quarter and a third of equity company at that stage. It's a risk reward kind of balance. So we invest in companies at the riskiest place because they can't even prove someone's going to pay for the product yet. And we balance that out by taking a little bit of a stronger equity stake. When we do these proof of concept investments, it's because we see someone who has a lot of promise and they have an idea, but they don't necessarily have the resources to build it out. And I think that's a big problem that we see today, is it doesn't take just a good idea to start a company, it takes a good idea and a lot of money. And so not everyone has access to a network where they can borrow $50,000, $100,000 from family and friends. So that's where we step in. And if we, like the person that's trying to build this out, and if we think that the product's really interesting in a cool space, that's when we do what we call a proof of concept investment, and that's something like $50,000 to $100,000.
Does it necessarily have to be a product, or is it something that you want to provide a services as well? Or does it have to be product driven in that retrospect?
Really what it depends on is if it's scalable.
Okay.
So services can be a little bit harder to
Okay.
scale.
Okay.
Software as a service, and of those two, but something that's scalable. Most VCs, when we invest, we don't get our money back until that company exits. So until it grows large enough that someone acquires it, or it might take a little longer, but it goes public.
Okay.
And so that's why we look for things that can scale quickly.
To add clarity on that, so if it's some sort of a professional services business,
Mhm.
odds are that's not something that's gonna interest us.
Okay.
Because that's very difficult to scale. It's so wrapped up in the people and the need of people.
Okay.
That even, when it's at the time, even if you develop a successful business and make money, what is the exit to the investors? There's a lot of that know-how, the relationships are
Okay.
wrapped up in those people. So where is the intellectual property that can be sold? What is that positioning in the marketplace? So usually professional services firms, unless it's a byproduct of unique proprietary technology, whether it's software, or it can even be a hard product. For whatever reason, there's some unique consultancy or advisory revenue that could even be substantial, but there has to be that core technology that's really the driver of that scalability, and then just the big pop, as you said, risk reward. We're looking at it, and if we're writing a check, we want to see that 5, 7, 8 years down the road, we're getting 10, 20 times that amount we wrote the check for, because that's the only way it makes sense for the risk that we're taking.
So if you wanted to go in a service-driven industry, so would I necessarily look at a different path far as investing, or far as my starting point, what I focus, because I know what my business is and I know what the services is going to provide. It's on the lines of mental health. So I know kind of where I want to go, but it's not necessarily a product. I know that it's kind of on the services as far as the advocacy side of it. So I guess that's where I'm trying to visualize my concept, my idea. Because my idea is real simple, but it's complex in trying to put it together. So I'm just trying to say, where should I start at? I got the idea. I got the idea as in what population it's going to serve, not necessarily a specific population, because mental health affects us all. So It's just a matter of trying to see where I can even begin to market it as a business. So where would my starting point be in trying to establish, this is the business, this is what I'm providing, and this is I expect to get paid for. And you know what I'm saying, 'cause I'm trying to help people
Yeah.
get paid. You know what I'm saying? I want to help people, don't get me
Right, that's
wrong.
the real
I want to make a difference in my community, do all this stuff in the world, don't get me wrong, I will do all that. But the sister trying to get paid too, you understand what I'm saying? So that's what I'm trying to figure out, like, all of this passion and all of this that I want to help and empower people. What does that look like as in a business? You know what I'm saying?
And it's almost to the same way. I mean, usually when we're looking at opportunities, a lot of that is already vetted out. There is the understanding of what the business is, the proposed model. We can talk about that some more, the validation of team, some of the needs, how it's going to happen. My running example I always give when I sit down with an entrepreneur is, I tell them the story of George Lucas. George Lucas, when they were creating a Star Wars movie, they say when he's describing and setting up a scene, it's as if he was actually there. He could hear the machinery. There was smoke in the air. He could describe the smells. When I sit down with an entrepreneur, I want to believe that they've seen it already. They're telling me the story as if they've lived it. And they're 10 years and they're time traveling back and they're explaining to me how this actually happened. So, that's at the stage that we start looking at the businesses. It sounds like you're still vetting out these very early stages of what this would look like, how it would be formed. And that's where a lot of these support organizations around the area can sit down and start talking about a business plan. What's the model that makes sense? What does it take to get there? How do you build out a spreadsheet?
Right,
Where are some unique sources for your type of business of capital?
right.
Because odds are it's not us, but where are other sources that could support what you're doing?
Right.
I would say too, like I invested in a company that has a product that has a very broad use. But what they had to do is figure out what we call their beachhead market. So where are they first going to deploy this? Even though we know that it could be a bigger group of people. So the example here is it's a specific way to deliver pharmaceutical drugs.
Got you.
And one area they focused on is they said, you know what, we want to go with opioid addiction treatment because we have some knowledge in that space and we can test it out. And so they're going to test it here, but then they could expand to other drugs. So if you just want to pick, maybe a subset of the population that you think would be the one that you could reach fastest or that you could help the most from the beginning, that might be a place to start, knowing then once you prove out your process with that group, then you can broaden it out.
And I'd say, I think we're here mostly to talk about the pathway to venture capital. That's the game that we're creating. There is a pathway to procuring an investor that just wants to get dividends, right? So talking to your phases, I really like what Todd said, and that there are organizations, there are groups that help you get business money. There are also grant opportunities, especially in the mental health space. So can you get an initial plan together? Can you get some seed capital, however much how much needed to get that kind of phase one done? Prove out some KPIs, develop some margins that make sense, right? Then go to maybe if there's ever a pathway to investment, I think probably in this round is a very, very friendly angel that cares about angel investor that cares about mental health, that looks at the space, understands the margins, and says, okay, they're out giving you, they are out there.
Yeah.
I mean, I have several examples right now. They'll give you, I don't know, anywhere from 100 to 300. I have one example of someone with 500. Someone, they're doing great, getting dividends now in like year 6, and they love it. They're getting a check at the end of the year, so that is possible.
Okay.
Let's chat afterwards.
Okay. And just to, I'm not gonna preach, but even though I will, but I'm gonna say I'm not. Okay, but and I guess for me to just be in this space is just so empowering, because I think oftentimes we don't think there's a way to put your vision out there. And I think sometimes just giving people the hope, like this can happen. I mean, it may take some work and it may take a different path to get there. But irregardless as to where you come from and all of that stuff that we think matters, it doesn't. It's the vision and how you see yourself. So I'm just grateful and I'm just like elated that I'm in this space. So
Yeah, in the same way we all got here differently, every entrepreneur gets to where they are.
right.
There's no one track, no education, no experience or anything like that. So you just got to figure your own way out.
Just be mindful And this goes to everybody here that's starting a business. You don't need to swallow the whole apple,
Right.
right? Take a bite. A startup, Steve Blank, right? This is just an experiment. He describes a startup as a temporary organization in search of a repeatable and scalable business model. In other words, it's just an experiment. Set the parameters of your experiment. This is what I believe. These are my assumptions. And go out and test it. Talk to customers. Talk to partners. Understand the feedback. Be honest with yourself that guess what? It's an experiment. You're going to be wrong more times than you're not. But learn from it and take the next step and then go through the experiment again to really hone in on, hey, this is the business model that works. I do have customers that are interested in this at this price through this offering. And when you hone in on that, then some of the avenues in which you can receive capital, who to work with and how to partner with them open up greatly. But it's going through that experimental process and honing in on what it is that you're actually offering. What does the market say about it?
You have a great resource here called the I-Core program that will put you in this position of you have to go out and you have to talk to people about what they think about your business idea, but not in a way that you're trying to sell it to them. So they can give you a very, very real response to it. So you're like, hey, how do you feel about this? And then they just get to kind of view that in a vacuum of like not being sold, not being asked anything. But you get feedback from people where they would say, I don't even understand why somebody would want that. Or, yeah, I get it, but wouldn't it be better if it was like this? Like they help you tweak that idea that you have and you figure out, as sometimes happens when you're building a product and you don't talk to someone, you have an idea of who your ideal customer is. And then you build your product for them and then you realize that person doesn't actually exist. So now you've built a product for no one. Like some versions of that person exist, but then you have to tweak it. So it's always better to kind of start with what the actual market is looking for and then build it based on that. But yeah, so the I-Core program here is great for that.
Everybody, Jessica is the greatest moderator.
Yeah.
Question.
Money you put in.
All right, so we're industry agnostic. It has to be in Wisconsin, it has to be a good tech job creator in Wisconsin. The sweet spot is $150,000 to $250,000. We will go smaller, 50 to 100, and do proof of concept type things. And then after that, just try and help facilitate the deal, whether it's pre-seed, seed, into lighter A rounds. And we syndicate. So I prefer not to be the lead. So if I have an opportunity I really, really like, I call all the other investor groups that I have relationships with. I call up Richelle. Richelle, I think this is right up your alley. I'm excited about it. If you like it, I can see bringing this to the investment committee. She'll perform due diligence. And I let Richelle lead the round, or because I'm just an awesome person to work with.
That's very true.
Richelle will call and say, hey, look, we're kicking in $500,000. It's $1 million deal. Will BrightStar come in? We'll do it. We'll kick in 250, and then either she or I will go out and talk to the other investors. 250 and try and get the round done, because one of the most important things when you get to that stage and you're raising money, speed is almost as important as the capital. And so one of the things I focus in on is getting the deals done faster. And so sometimes that's actually pounding on the lead investor. I think, well, what's taking so long?
We blame the
get
lawyers.
this
It's
going.
always the lawyers. It's never the investors. That's why we're not lawyers anymore.
All three of us.
So, following up on your Richelle statement and as well as your sort of honing in on where you sort of want to focus for your deployment, investment, all that kind of stuff. Our family company, he has a consulting business sold. Second one, we have a consulting business that's still running. And now the third deployment, we sort of hit a stall model for investors, stuff like that. And for your beachhead comment, we've identified markets, we've identified deployment, we've identified scalability, vertical markets, international deployment, all that kind of stuff. We've gone to business conferences, ran the gamut, and still we're self-funded. So that it's only sort of like a tangible. What would would sort of be the best method to identify how we can move around the hurdles that we sort of run into.
So you're trying to find product market fit or like service market.
I mean, I identified a really strong market. So we targeted small businesses and we have software, we have mobile, we have hardware platform for digital signage and advertising. And for some reason, it's just sort of hit stall. We're sort of at the regular precipice where we're 80% ready, we can beta, we can deploy. We're just working out the kinks and sort of like putting polish on everything. And we've still sort of hit this kind of struggle lately of, you know, looking for some kind of initial investment, even for.
Do you think you could get revenue before you take investment?
So as of right now, zero revenue. And we.
Could you?
Right, like if you,
But could you?
because you said you could deploy.
Yeah. So the model that we have, I mean, even for deployment, is in direct competition in any of the markets that we sort of want to stand against. Undercuts the price, offers a better service, data aggregation, you name it. And for some reason, we have all of these golden points that everyone's sort of jumping on. And we've been capable of diversifying ourselves from the competition. And have still sort of ran into these struggles.
Let me address this by going high level.
Sure.
Let's go real high level. I'd love to hear their opinions. But an entrepreneur comes to you, right? I'll lead with it. You get the elevator pitch, you get the messaging. I think it's good to hear from all three of us. So someone comes to me and it's what do I need to hear? So I'll get to the where I think you're at, where I think you could push farther. I always, so it's three things. What do you got? Why is it cool? And how do we make money? It's important for you to understand that off that conversation, I need to, and it could be 60 seconds. I need to be able to walk away and understand what you got and why is it cool enough to describe it to one of my buddies and understand how you make money. If there's holes in that, it's tough. And you know, I should even go back. I always start this conversation with this way. Anybody has sensitive ears, put on earmuffs right now. Don't be a dick. Right? It's shocking how hard that is for people. None of us wants to work with somebody we don't like, and that's from the initial conversation all the way through to into due diligence. And it's shocking to me how someone just can't help being an a-hole.
I don't think he's calling you.
So let's just start there, then you get the other three. That next step, then after I understand what you got, why it's cool, how you make money, then to me, it's, and Izzy says this all the time, bet on the jockey, right? I want to understand how good is the team, and then most important, market validation. So to her question of, can you go get revenue? If you're having a tough time finding investors, it's probably because the investors right now are just not seeing that step. Are you at a point where you can go get some customers, show revenue? Because the ultimate market validation is somebody's actually buying the product within the business model and at the price points that you have strategized and put out there as part of your plan. If you can't get revenue, there's, you know, some things aren't revenue. You can't just commercialize a product, but maybe you can get LOIs. Maybe there's key industry partners you can get to that's the most advanced you can get that are going to work with you. Anything that you can show some level of market validation, that value is important to the marketplace, can bring that investor along and say, okay, I want to spend some time with this, I'm going to write a check.
Hi, everybody. I just want to jump in right there because from what I'm hearing is that there are strategic partners, specific product or idea can partner up with and make whatever they have happen to a degree that is profitable. But what happens when you get to that point where it's like put everything together, but it's still like running into this brick wall when it comes to actually getting the resources you need for your actual product. even if you have an MVP, it's actually generating revenue, you still run into this wall. It gets kind of discouraging.
There's a lot of different reasons that that could happen. And, you know, I'll say from my point of view, we more often as a VC look for reasons to say no than reasons to say yes, because there are so many opportunities out there and things are really exciting that it's hard to filter, right? And I don't have enough money to fund all of them. And so we really just kind of look for reasons to say no. So for your product, what I'm hearing is that you have competitors in the marketplace. And there's some inertia in getting people to switch over. And if your real value prop to them is it's cheaper, if they've been with a service provider for a while, they might have an established relationship, they might fully understand how to use that product. You know, so I think that there's maybe some education that you would have to do to get those customers to come over. And you know, we invest in pre-revenue companies, but typically what I see is that they need the money to further develop the product to get it to a point where they could then go and get a customer out. So that's why I asked you that question of, you know, if you needed to go get a customer, because you said you have a beta, could you? Because to me, then that's the right move. It's not that you need money. Because if they're going to give you more money, they can't solve that problem. The money is not going to get those people to change their mind about their current service provider. So what I think the best step for you would be is to just try to get a customer to use it. Even if you have to say, you know what, free trial. A lot of people do this if they have, you know, software or a service, they might say, we'll let you do this for free for 6 months. Then you get them hooked. Then they, you know, they don't want to go back or they're not going to want to do this again with a new, you know, service provider. But then,
It's an experiment.
yep.
It's an experiment.
And then you can brag about your download numbers.
Yeah.
When you're looking for investment or money, right?
Right, so we invested in a company that had 500 users. I mean, it was a free app, but they had 500 users and they had hardly done any marketing. And so what they needed was to then build out the premium version of the app to get to the paid version. And so that's what we gave them money for. So, you know, they had a bunch of people that wanted to use the app. They just weren't, it wasn't in a position to make money. So that's one of those ones where they needed our money to then become revenue generating. But, you know, and it sounds, so you said you have a product, you have some revenue, but you're looking for some new investment?
Yeah, you know, it's like when you're filling out for these applications, everyone has their own different set of standards, and you may use blue ink on this one, or you may use black ink, and that's wrong. You know, so you just get turned down. Right. But it is the goal and the product that really should speak for itself. You know, that's what I'm talking about.
See, my questions for that one would be, how big is the market? What's your revenue model? Because sometimes you could have a really, really, really great product. And you could say, look, it's ready to go. We have people that are paying for it. But if you tell me that your average customer is going to give you, you know, $100 a year and there's, you know, 100 customers in the market. I mean, that's great, but it's not going to be something I'm going to put my money into, because there's really, when you say you're going to scale, like, even if you scale to 100% of the market, it's not going to be something that's going to get the return that I need. So that would probably be my first question for you, is then what is the size of the market that you're operating in? How much of that market do you think you can capture, and what's your revenue model?
I will say that's probably the biggest deal breaker, right? That we see a lot. We see a lot of companies that have a clear sight to wonderful business, but aren't presenting us the return possibilities, right? Aren't presenting us, hey, this is $1 billion market. If we get 8% of it, here's our pathway potentially more than 8%. We don't see that that often. What we do is potentially invest. To give you kind of percentages, let's see here. We've closed in the last 16 months, 3 deals. We've looked at 1,700 companies. 3 out of 1,700, right? And those are companies that pitch decks that, you know, went through the process. That were, not all of them were amazing, but solid companies. Which kind of brings me to the next point. Higher level, looking at the questions that you guys just asked. One thing to know is that there's rules to this game, right? And there's, you know, accelerators that popped up, and I think the core purpose of accelerators was to teach founders the rules of the game. What are the rules of the game? Have a good pitch deck. What should your pitch deck have? What 10 slides are important? How do you talk through your product? How do you talk through your unit economics? There's absolutely rules to this game. And I don't know about you two, I would never invest probably in a company that comes to me that doesn't understand the rules and can't talk the talk and understand that, hey, this is phase one and we're raising our seed round and what, you know, what's gonna be the pathway to the next round, what's the pathway to the next round and what to expect. Having once 10 years ago been the first time tech founder, I took the approach of jumping in the ocean and trying to swim and drowning several times, failing a couple of times with companies that I started. So learning the rules of the game, I can never preach that enough, right? And there's a lot of different ways. Brett Feld's book, Venture Deals, great book. If you're looking to go on the pathway of venture capital, read that book.
I'd say that, I swear I'd never be the old curmudgeon investor at the end of the panel. I challenge you, to start with understanding what type of business it is, and then understanding what are all the resources that are available to help that type of business. They are around. But you gotta know where to go, and part of that is the hustle. It's constant. It's going to events like this. There are events all over the cities, you know, startup week, just go to everything. Start meeting people, get a better sense. That network will build. And at the end of the day, if you're still having problems, maybe the idea isn't good enough for the market. And I call that out to all of you, right? You guys, if you're an entrepreneur, you're an irrational fool. Because odds are this is gonna fail. Odds are you're gonna be sent back.
I'm not irrational.
Like a true entrepreneur.
But you need to hear that.
You might have to talk to like 100 investors, I mean.
Yeah, I mean, so I raised,
It's hard freaking work.
when I raised the Winnow Fund, because I mean, we've all had to raise money, right? So like,
Over 1,000 investor pitches, and I raised 15 million.
I mean, that's the thing, right? Like, so I raised a $10 million fund. Half of my capital came from investor. That was the Badger Fund of Funds, my primary partner. But so I have 53 total investors. If you guys had any idea how many meetings I took to get 53 investors. Some of those investors took 5 meetings, 10 meetings, just to get one person. And then, you know, some of them took 1 meeting. So it really, really depends on who you're talking to, you know, as far as like the rules of the game, know who you're talking to and what you think is going to interest them. Don't make it up because you think that if you tell them what they want to hear, they'll invest in you, but like tailor it, right? So are you selling them a product? Are you selling them part of your company? If someone comes to me and their entire pitch deck or their entire, you know, elevator pitch is all about how cool their product is, for me. Tell me how much money you're going to make for us. Because I have 53 people that want to know how much money I'm going to make for them.
Show me you put in the time that you understand what the Winnow Fund actually invests in.
Yeah.
And you come to her and say, look, this is why this is a fit. You come from that, I want to see that. I can't stand when entrepreneurs, you can tell it's just a mass solicitation.
Do you get emails from, so we only invest in Wisconsin, do you get emails from people?
All over the
Yeah.
country.
I get an email probably once a week that's like, hey, Richelle, we just read about the Winnow Fund and we think we'd be a great fit. We're based in Chicago, Minneapolis, anywhere that's not in Wisconsin. And I'm like, please tell me more about how you think you're a great fit for the fund. I mean, so there's, do a little research, but then when you go out and you pitch, understand that, you know, you might have to pitch. I think I had 400 meetings to get to, you know, 50 some investors. And that's like 400 like initial meetings or emails or whatever it was, phone calls, Zoom meetings to get to where I was. And so everybody has their own reasons for saying no. I think that was the hardest part for me, is not taking it personally. I probably should have in some situations. Yeah.
My investment efforts, I've probably done $50 to $100 million for and I say it gets easier, but it doesn't. It's hard work. It's a pain in the butt. I mean, even if you like people, you will get sick of people. And frankly, you'll get sick of starting to view new people you meet only for what they can give you and the capital they can provide.
Just see
You
dollars.
almost devalue the human being upon you, but you're fighting for that baby. It's your business. But it's tough. It wears on you. It's absolutely draining.
But what I will say is, if you are not the biggest advocate for what you're doing, you shouldn't be doing it. No one else in this world should be trying harder to do what you need to do for your company than you. And if you're not willing to go out there and make the ask, it's so uncomfortable. I hated being at the end of a pitch meeting and being like, so, you're gonna write me a check? But you have to make the ask. If you don't, no one's gonna hand you what you're not asking for, right? And so, you know, they might give you advice, but they're probably not gonna give you money. So that's the other thing is I think sometimes you have to ask yourself if you're really making the right ask. Are you being clear in asking for specifically what you want or what you need? Because maybe part of the problem is they don't actually know what you're trying to get from them.
Between your experience, so say, so we're targeting small businesses, Metro Wisconsin, 50,000 plus small businesses. If someone were to target that market and try and step into it, do you know, like, what even a terrible percentage of acquisition for those businesses for like a product would be?
You mean like what's your potential close rate?
Yeah.
No clue.
Sure.
I would, you know, just keep plugging forward with back to the whole beachhead and everything, to say small businesses of that size, that's really broad. You got a whole, what exact type of business are we talking about? Back to George Lucas, right? Did you come in and like, hey, look, we discovered it's this type of, it's not even a business, it's a practice. You know, it's a doctor's practice. And we realized that it's gotta be more than 5, it's gotta be no less or no more than 5, but 15 to 20 tops. And it has to be either oncology or radiology, everything else doesn't matter. And it had to have started in the past 6 years, for whatever reason, it's longer than that, they've just been around, they don't do the software, like you work it all the way down and target, and then it's, hey, when we want to get in, we don't target the doctor. You don't even target the CFO. We need to target this specific, their director of facilities within that clinic because it's actually a piece of equipment. That is actually the champion. That's actually the person that negotiates the contract and facilitates. But you gotta get it down to that level that you know the actual persona of the business, who to interact with, who's the saboteur, who time and time again, this is the person who's gonna be the skeptic, and you have to understand how to overcome it.
Sure. I mean, the question was so generalized in that aspect that our product offers the capabilities to effectively any business that offers a good service. Anyone that does any in-person business, you can offer something to them. So that's why it was so broad in the sense of like, there's 15,000 plus small businesses in Wisconsin, along 2.3 million in America, and God knows what else.
Beachhead.
Yeah,
one.
I completely agree.
Dental offices, right? We're gonna go with dental offices, because guess what happens? You land 2 or 3, you show the value there, suddenly you have the case proven, right? That you're gonna start hitting other dental offices.
Yeah.
And then these dentists are gonna support, they're gonna be the sponsors, they're gonna write grid letters, they're gonna introduce it to all their dental buddies.
And then you'll know who to talk to every time you go to a dentist office, you know what the kind of like sales cycle is gonna be for that, approximately how long it's gonna take, instead of having a completely different experience with every sale that you try to make. It's gonna be really frustrating.
Think about a company like MindBody. It's just a scheduling software. It's the same as any other scheduling software, but they completely own the market on Pilates, yoga. Like it's the interface that people use for health and wellness. And even though that product available everywhere, they found their specific market that said, this is who needs this right now, who doesn't have it and needs this interface. And they own that market. And yeah, they could grow elsewhere, but that is theirs and it ain't going anywhere.
Sure. If you come to me and say, hey, we've proven it, man, we got 4 customers, and it's the dental office, a bike shop, you know, an antique store, and some other miscellaneous things, I'm gonna look at you like, what have you proven? But I don't know what you're doing.
And you started the description of your business with, there's one consulting company, then there was another company, this was third. My question for you would be, did those first 2 companies sell to small businesses? If they did, right, what are those other relationships there that you're building upon? Did these 2 companies allow you to discover the problem that you're now looking to solve for the same customer base in a different way? Like, those are the types of questions, and if the answer to that is yes, yes, and yes, okay, you have our interest.
So they all managed to be different flavors. So the first one got sold out, that became a lobby for college. The second one is still alive, that's for Winter Consulting, so we're still doing consulting, reliable water services, water heater providers for Wisconsin. And now this one is software, hardware-based lab. As well as mobile lab. So we've managed to try and like do something different each time. And this being the forte has somehow been the hardest one.
I'll jump on the comment these two made with beachheads. What small businesses, which ones have the capacity to pay for what you're selling? Right now, because small business, you think all of
$50 a year.
that's all you're charging, is $50 a year. Okay, and then the second question would be, okay, how many do you need to sell to in order to ultimately get an agreement with your company and ultimately just prove to us that there's actually a return on investment opportunity? And then what is the sales cycle?
So ultimately, that's why I ultimately asked the question. You know, in the bad world, what would be the measure for even for those 50,000? If it was 5%, that's what 125,000 a year.
Yes, it really depends on how long the sales cycle is.
Sure.
So what's your cost of customer acquisition, right? If you're only gonna make $50 a year from each one of those.
And you're getting 1 out of every 20.
Yeah, 1 out of every 20, and it's costing you $3 to sell to each one of those, you're losing $10 per customer. You know what I mean? So what, your unit economics have to really make sense. Sure.
So one of the questions that we talk about a lot in all these panels or hear from you guys is regarding playing the game, but the team. So like, I guess the question is like, I don't want our people to burn a bridge and talk to you too soon, and then you don't have a good feeling about them. Like, when are they ready? Like you said, they have to have the pitch. Like, what are their essential things they have to have, and what if they're just a founder that's trying to build a team still? Like, if they're just one person, should they wait until they build a couple more people on their team? Curious.
I'll answer that. So, I mean, we just closed a deal that was a single founder, and she had a wonderful advisory team. She had sort of part-time folks that are participating, but she's just a solo founder. In different cases, she's been working on this for 4 years, and she's created data pipelines, partnership channels. You know, she's got some levels, a couple of small angel investors, but she's put herself in a position where she's an industry expert. She's what we believe accurately identified a significant problem and a potential solution for that problem. This was a studio company, so we felt that what she needed was a tech team. And we provided her the tech team to develop the product and get her position. She has right now, so it goes looking quite positive. So I think the answer to that is probably depends on the founder. This particular founder was someone that spent 22 years in the health tech lobbying arm of Walgreens and has a wonderful background and has come to the space with great experience. So would I invest in the 24-year-old solo version of myself? Probably not. just to be real about it. It's really tough.
You can see pictures with hair.
It was long and curly hairs.
You wouldn't write it.
You wouldn't write a check.
But yes, I think the reality is that it depends on the founder. If it's a solo founder that's an engineer that's actually building the product themselves, total game changer. Or it significantly mitigates a lot of risk if that type of founder has those abilities. But what's the network? I would have invested in the 28-year-old version of myself because I had a really strong network and I had engineers to bring on, and I was able to build companies and do that successfully.
Yeah, it depends on what your company is, right? So like if you have an engineer and they're like, great, we've got the product really built out, but they have no experience on the business side.
Very common.
Then I would say, okay, like,
That's pretty much what we're.
yeah, so
Two-man team, system architect, engineer, and then. That's all that is.
Yeah.
It's like, we have 2 people and.
then maybe that's part of it too, like
Sure.
bring on someone on the business side or on the sales side. Because to me, like you like to have a well-rounded skill set. That could be in one person, that could be in 3 people. The other question is if you have a solo founder, why are they a solo founder, right? Are they hard to work with? Can they just not let go of things in their company? I mean, I have a founder who is so good at project management, but so bad at letting anybody else do anything. And so, now we're at the point where the company's growing and we're saying like, you gotta go hire people. And it's interesting because it's been like a conversation. We're like, we're not saying you're bad at what you're doing. We're just saying there's only one of you. And so if somebody ever does recommend that you bring on someone, don't think that it's because they think that you're incompetent, just, we realize that entrepreneurs burn themselves out. And they silo themselves. You do not have to do this alone.
Like Todd said, one of my go-to lines is, I think we're all quite similar, maybe we'll jockey better. So I really want to learn about that person, that human being. If it's a solo person, how, what level of sort of self-identification, self-awareness do they have? Do they have the ability to say, I'm really good at this, terrible at this, I have no experience in this, so I've created my product roadmap, my company roadmap accordingly. If you have capital, we're gonna hire this person because I know I need it. I don't have any artificial intelligence experience, I've never built out an AI machine model. So, self-awareness is absolutely key. Building your entire model around what you can do. You're an engineer, you just fit it in from this entire group of people that maybe not great on the business side. So I'd love to see in the model how you solve that problem. That's exactly what.
If you don't have it, it's back to, after that initial impression of, it's cool, how do we make money? Again, it's the team, the people, and market validation. You say, Todd, we can't do revenue. We can't go out and get LOIs. You scale it down at a bare minimum, if you could combine the two and actually give me a person that would validate it for you. We're investors, we're not that smart. Not that smart. But we know.
We are not experts in your industry.
We know how to rely on other smart people. So investments are made not from the business plan, but the post-it that's on top of the business plan from the right person that says, I think you should look at this. There's a certain silver fox in the back of the room right over there in a blue shirt who
I was like, who's he talking about? We got a couple people back here.
2 years ago now, he calls and says, I think this is a company that you will find interesting. And I get excited if he calls me and says, I think you will find this interesting. And I take the time and I spend, and just a couple months, 2 months ago, we wrote a check. And so,
We have a
think
plan
about
to
that. Who can you talk to that actually provides validation to your idea? There has to be something that validates it to us. If you can find the right person that has our ear, that can speak to it intelligently, why it's good, why it's a big deal, and just reinforce everything you say.
You can have
go always.
the best business plan in the entire world. It could be like the most thought out, like every single thing is there. If your team can't execute that plan, it is meaningless. It's completely worthless to me. And we're not going to consider it. And so that is a big part of it, is like, you need to be able to explain that. You need to be able to tell me why I should believe in your ability to go out and execute that plan. But I think you also kind of asked, like, what do you need to have before you talk to investors? It's all personal preference. We are all very different people, but I will tell you one thing that I wish everyone understood. Approach it like it's dating. This is a long-term relationship that you are trying to get into with someone, right? And you are going to build something together. If you email me, and this is my first meeting, this is our first date, you sent me every single thing about your company. Now imagine if you went on a first date with someone and they told you every single thing about them and their entire history and all of their baggage and everything else. What would you do? You're like, I'm overwhelmed. I think you're looking for a reason to say no. You're like, I probably found 2 or 3 in here. To me, I just want to understand those 3 things. What are you building? Why is it cool? How are you gonna make me money? Right? So the first date's like, do we have common interests? Are our goals aligned? Do we want to learn more about each other? Then you move on from there. So to me, it's like the executive summary, maybe 2 pages about your company, hit those 3 highlights. And then if we're interested, we'll say, this is really great. Why don't we set up a time for you to go through your pitch deck? And then we'll find the time you can walk through the pitch deck. The pitch deck might be 10, 15 slides or something like that. You expand a little bit on the executive summary. And then after that, you go into kind of, maybe we're going to talk a little more about the market. We're going to do some research, go into due diligence, and you move on from there. But to me, it's like, if you just put everything out there, you send me an email and it's got all your financials attached to it and your pitch deck and like bios for everyone. And, you had 1,700 companies you looked at. Do you think he's going to read 1,700 emails with that much stuff attached? No, he doesn't have time.
Look at an AI to do it.
Yeah, let's build a block to make our investment decision. But yeah, so that's part of it.
Hi, so I wondered if you guys would address the 2%, famous 2% of women led businesses that are invested in. How do you feel as investors about that statistic, and what do you think women-led companies, what obstacles are they finding? Is it a dating
Thank you.
obstacle?
No, it's an investor community problem. We've actually talked about this. The three of us have got together to talk about this. It's not something that entrepreneurs need to solve. You guys have enough going on, right? You do not have to solve the issue of money not going to diverse entrepreneurs. That's our problem. And what we need is more diversity on the investor side of the table. And I feel very, very strongly and negatively about funds being created that are targeting different diverse groups, because I think the message that we're sending is that you need to go to a different place to get funding. That is not how this should work. We just need more diversity across the board so that when somebody walks into a room to pitch to a bunch of investors, they don't look at, all the investors look the same and they don't look like the entrepreneur. Because I went through that when I was raising the fund. Thank you. When I was raising the fund, that happened to me more often than not. My mentor is a really experienced older white man who has successfully done venture funding in Wisconsin. When we walked into a room together, they would talk to him. It's my fund, I was pitching, all the questions went to him. And he didn't realize it until after I pointed out to him. And so to me, I hated that feeling, but it wasn't my fault. It was the investor's fault. And so to me, I think this is something that the investors have to solve.
And I just want to reinforce the sense of having to go to a special place to raise money because I know a woman-run company, right? That ends up, I feel, diminishing the product, diminishing our research, diminishing what it is that we can do. And I take him with me because he's big.
I think it shouldn't happen.
But I don't answer the question.
That's right. You won't answer the question. But it happens to me all the time. They'll ask me the question and then I answer. Right.
Richelle's, spot on, but let's recognize it's two sides of the same coin. There needs to be more. But let's recognize what venture capital is, and it is kind of a little boys network. And I don't say that in a negative way, it's just the way, all three of us, the amount of time, energy to actually break through into this space for anybody is tough. It's tough. It's changing, it's transitioning, you're seeing it over time. On the other side, it is a numbers game to some extent. So if you guys have ever give this talk, I'll do the summary. Looking at female entrepreneurs, I think females have the qualities to be far better entrepreneurs than men. The problem is they're usually less likely to take a risk. For some reason, in our brains, my running joke is always, if you're watching the primetime special of some idiot on a dirt bike looking to jump the Grand Canyon, is it ever over? No, the woman is not idiot enough to do. And so what's great that we've seen now over the past decade or two is I'm seeing far more female entrepreneurs. And so we need to bring that out. They need to be part of the teams. That's part of a well-rounded management team, is having great female entrepreneurs because they bring a different perspective, they have different energy, there's a different passion. Actually, sometimes it's the difference between success and failure. I'm seeing that, and you guys can speak to it. I'm seeing a drastic change over the past 10 years. And again, on both sides of the equation, one is just going to take longer. One, I think, is there's this built-up hunger, and I'm just seeing entrepreneurs more and more.
So do you think that a female entrepreneur has to represent herself or themselves as being more willing to take risks, or even to the point at where they've taken risks before?
No.
They can manage risk?
The mere fact that you're here willing to do it shows that risk. It's just usually, and this is still lopsided male in here. It's usually just getting to this point that I'm willing to put my livelihood my family, my life on the line to actually do this irrational thing, right? To be the fool, to jump the Grand Canyon, because I have hope. Hope is a powerful thing. I want the glory of landing on the other side at the risk of that's a long ways down.
I would say women are not necessarily more risk averse. We just need to understand the risk better. I think it's what I found, and I don't want to generalize too much, but I think to me, when I was pitching to women, they would ask more questions, and it was just a little bit more of like, just give me a little bit of extra education before I understand. And then sometimes they were like, wow, that risk is worse than I canyon. But to me, I think that's where most women were coming from, is that they just felt like they wanted to understand it a little bit more. And it's not that there's like a difference in the knowledge base of men and women. I think women assume that men understand things more when they're making decisions, and they just feel like they haven't gotten that background in the investing world, I would say, because there just are fewer women in this world, so they haven't been exposed to it as much. So to me, I think they feel like they need to kind of get some of that background information before they make the decision to enter into, you know, investing or entrepreneurship.
So, well, we're at 1:05. I just want to give a heads up. I know some of our panelists, you know, they have to run to other things, but.
He's
Stick
big, you
around.
gotta take his question.
Final question.
You won't let us leave.
Very quickly, Richelle mentioned evaluating the team of the company. When you look at, when we're bringing other investors into the game, what is the role of the other partners that have already brought investment to the table in your evaluation of whether is that a factor in your evaluation?
Yeah.
Investors.
Sometimes a big factor, right? So if investors are friendly, they'll chat with us from previous rounds. That happens all the time. I'll ask for that. Because it's great. How's it been? How are things going? What information are you willing to share with us about the company? If the previous investor is an awesome angel that has a great track record, if it's a fund, the name that has a great track record, those are game changers, absolutely game changers. Same way that if, as opposed to you sending me a LinkedIn message, you have a friend that's connected to you, and the friend says, hey, take a look at this deal. It sounds stupid, it makes such a difference. It really does. It's this weird thing for us. And the reason why is because, like Richelle said earlier, we're not industry experts across the board. People just assume we are. No, we just write checks and then have to figure out and gain a PhD in these companies as quick as we possibly can. We rely on our network. So anytime we get the opportunity to mitigate risk, circumvent diligence, really helps. So it's a big time factor.
About people, I'll look at, can they offer value? And if they're offering value, how are they doing it? If they can offer value and they're not, why is it?
Yeah.
If it's just a random, we got $25,000 from a couple cousins, they're not actively, okay, that I don't look at that.
Which is-
There's somebody on the cap table that I don't know about.
Yeah.
But it's whether it's a former investor, an advisor, can they bring us back to that, adding a little bit of validation through your people?
And there's people that, if they're on the cap table, I would probably say it would make me less likely to invest. What I like to see is people that are in it for the long run, right? So like when we invest in our first round, we save money to invest in follow-on rounds. So if I invest and then I'm gonna go over to Todd for the next round, and I'm gonna say, hey, I have a company that's raising another round of money. He's gonna say, are you doing follow-on this round? And then I'll say, yes. If I say no, that's gonna be like, well, why aren't you? What's going on?
Why are you giving me your dog?
Background, like,
Why are you
yeah.
giving me your dog in that?
Yeah. And so to me, when I see someone who's sitting on the cap table and they're not doing anything beyond that first round, that's kind of tough for me. Because I'm wondering why then am I gonna join into this company? And then am I gonna feel the same as that person? Or am I gonna then be responsible for kind of carrying this company into the next round or two? So we call them dead weight on the cap table. Because they're just gonna sit there and not help the company at all, and they're not gonna put more money or any, other, networking or any of that, then.
So then would you recommend buying out, like if you were in a generator or something else who took some equity or an accelerator? Do you want the accelerator to stay on the cap table, or do you want the accelerator to get bought out as soon as? Sorry.
Sometimes it's not up to us. I've bought out service providers on the cap table before. So if to get a company going, you had to give up, 5% equity to get someone to build something out for you. We bought them out because they're not gonna do anything beyond that.
That's a tough one. Odds are you probably, it's not worth the struggle to get them out. I think most investors recognize what that is. I'll say there is a subtle movement with some of the bigger VCs across the country. They'll look at accelerator capital. The cap table is a negative. Like, who am I dealing with that you got to go through one of these accelerators if it wasn't Y Combinator or Techstars? So there's that subtle thing building up, but I think for the most part, with the ecosystem, it's that this accelerator that put stuff together, and now they're sitting on the cap table, and hopefully they help.
Yeah, to that point, like the value you got has to be worth the equity you gave up for it. Because if we look at you and you're still not ready to go out and raise money, but you've got, an accelerator, anyone else on the cap table, that's really, really troublesome.
And combining to your previous question about there's funds out there that, especially since 2020, that are focused on labor, focused on minorities, Black individuals, Latinos. Having just gone through this process, the founder I was talking about, she's Black in DC, Milwaukee, and going through our strategy of what funds she should go to after we get the need completed. I put those all at the end, every single one of them. I said, look, if we went right now to these 20, we would raise $1 million easily. But none of these funds have a track record. None of them, they haven't been around most have been around for like a year and a half now. Don't have a portfolio, and there's a focus on DNIs, right? Maybe we'll tap those funds to just close out the round, so just to save us some time. That's how I think about it as a VC. I wouldn't think I'm too dissimilar than most. So, as a woman founder, that's one thing to think about. There is capital out there now. There's a record amount of capital raised for Latino founders, Black founders, women founders in 2020 and in 2021. Record amounts. So there's a lot of dry powder. There's an opportunity. Just be careful.
You've only ever raised from a fund that's specifically investing in your demographic. It's gonna be hard to then go to a broader fund.
We don't want anyone on our cap table that we don't want at our dinner table.
Yeah.
To the extent that we can do that, we really do want to see our people as partners, as advisors, and as people that have the same passion about our product and mission as we do. So, and that's also something that'll rumble around in some of the other places that we've been about generators and accelerators and what their real purpose is and how long they're used to. As a founder, I think Jessica has something that would be useful to talk about a little bit. The best thing I heard this month, I guess, was that, an accelerator is not a fundraising plan. So I think that there's something really useful about understanding that idea and how long to stay as well. Because it's very tempting and exhausting. It's also exhausting. Pitch accelerators over and over again.
If anybody thinks that an accelerator is a magical elixir that's going to all this money is going to come along, it's still hard. It's still so much energy. Could it open a door or two? So you have to think, giving up a piece of my business worth the time to accelerate that action off of that value. Part of that is talking to people that have recently gone through the accelerator, other places.
Yeah, it's your fundraising resume, right? Like if that happened in the very beginning, you have to do stuff from that point on. So if you're coming to me and you went to an accelerator 3 years ago, we have done nothing in between, and that's going to be kind of problematic for us, right? Because you just have to show that you've been adding to that kind of fundraising resume. It's more about kind of recency and anything that you've done since that point.
That's what we are coming to think of as the whole bundle. Small business loans, grants, investment, revenue, all of those things would count as movement forward. Is that correct? When you're looking at that, not just investment?
Yeah, I think this is a completely different thing, and I know we have to wrap it up, but grants.
We're still talking.
I have so much to say here. Grants and that type of stuff it's very helpful. Like, don't get me wrong, non-dilutive funding is great for companies, but it becomes troublesome when we try to put a value on it. And because if you get $500,000 of funding from a grant program, that doesn't necessarily equate to a $500,000 increase in the value of your company, right? And so but a lot of people kind of do the math that way, and it's a reasonable place to start, but you have to think about it, it's not like a dollar for dollar value increase. Depends on what you did with the funding, that's gonna increase the value of your
That's
company.
a good point. Let me also just say, apply for grants. And I think these are, I mean, they're non-dilutive. It could, depending on the type of grant, reinforce and give that validation. But there's tons of entrepreneurs I'll come across, you know, or, oh, it's gonna take 3 years to get that. Sure as heck, 3 years goes in a blink of an eye.
Yeah.
And 3 years down the road, you're gonna be like, son of a gun, I wish I had that $500,000 grant.
But I will say
Part of the
too,
work.
for some of the federal grants, you have to follow through on that plan, even if your business should be going in a different direction. That's another thing that's a little bit iffy about it, is sometimes you are signing up to perform a complete project and you get halfway through the project and you're like, yeah, it's cool science, but it's not good for the commercial value of this. But you're obligated to finish that. And so if I'm looking at a company and I'm thinking like, you know, good or bad, this is what they're locked up doing for the next year. Sometimes that's gonna affect my decision on whether we then want to invest in that. Right.
All right, I guess 1:15. So thank you. Round of applause. You guys, that was some of your tips, and we actually recorded it, so if you don't mind, we'll put it on our page so people can watch it later, and whoever missed it, and please do reach out to these guys if you're a good match, and I hope so. Thank you.
Thank you. Got a last question.
It could be like perfect. Then I'm going to talk to that. Basically,
Yeah.